Michelle.
Hi, Alina.
How are you doing today?
I'm doing wonderful. How are you?
Good. Finally, we are making this happen.
I know. I'm proud of us.
Yeah, we have been planning maybe for 2 months.
Oh, yeah. Well, these things take planning, right?
Right. So why I decided to create this video with you, because I have a lot of buyers who are asking how to improve their credit score before applying for a loan. That's why we are here. You are with cross-country mortgage
Yes.
for 23 years. Wow.
Yep.
In the same company or with different?
No, not the same company. 23 years in the industry. I've been at the same company, gosh, probably going on like 15 years now or so.
Wow. Okay. So I remember when I came to the US 10 years ago, everyone told me you need to get credit cards, you need to have a credit report, a credit score, and all this kind of information. Like, what is that? So let's dive in.
Wonderful. Yeah, I mean, it's funny you say that because I work with clients from other countries that have either recently moved to the United States for work, or they want to have a second home here, or whatever the case may be. And that is one of the biggest things that I have to coach them on, is how to establish a credit score. And they don't even know what that really means. And it does take time. It can take 6 months to a year to do that. So it's a really important topic for people to be aware of if they're new here, but also for people that have always lived here that have just never thought about their credit score. Like, they didn't realize how it impacted them, or why it was important, or why they should be thinking about it.
Yeah.
So this is such a great topic for so many people.
So I think those people start to think about credit score when they apply for a loan, right?
Yeah, exactly. It's not until, I think, especially a home mortgage, because it's such a big loan, number one. And secondarily, for most people, it's a 30-year loan. So that's the first time they really are like, wow, how is my credit score affecting me? I think a lot of times when people get credit cards or car loans, they don't really do a deep dive conversation with whoever is helping them with that to understand why their credit score is important.
Yeah, but even applying for rent, not only loans.
Okay, go ahead.
So what is a credit score and why is it important when applying for a loan?
So a credit score, we have 3 bureaus: Equifax, Experian, and TransUnion. And whenever you take out a loan associated with your social security number, they track it. And so they're tracking a lot of different things, but I think what's really important is they're tracking how you make your payments. Are you making them on time? That's the most important thing. They're looking at how long you've had a trade line. A trade line is what we call each individual creditor. So let's just say you had a credit card. That would be one trade line on your credit report. So they're looking at, are you making your payments on time when they're due? How long have you established this trade line with this company? Do you have a long history? That's a good thing.
Okay.
And then they're also looking at how you use your available credit. And what I mean by that is, are you maxing every credit card out to the limit? Or are you using it more appropriately? Like, if you have a $3,000 limit, are you charging $3,000 every month? Or are you charging maybe $800 or $1,200 every month and kind of staying well below your limit? I would say that that's probably the most important things they're looking at for each trade line, is those 3 qualities.
Okay, so for example, I have 10,000 on my credit card limit. How much should I use per month?
Well, in a perfect world, they say kind of the magic threshold is you want to stay under 30% of your credit limit. So if you have $1,000 credit card limit, you want to try to keep your balance under $3,000 every month. But I'm sorry, back to your original question, Alina. I don't want to skip what you asked me, is why is your credit score important? So these 3 bureaus are tracking all your trade lines. How are you using the credit? How are you paying it back? And over time, they watch a pattern. You develop a pattern as a consumer. And so based on your pattern over time on how you manage credit and debt, they associate a score to you as a person. And so each bureau gives you a different score. Supposedly, they are supposed to always share information with one another. So all three bureaus are technically supposed to have the same exact information about you. But I can tell you from a practical basis, there are times where I notice that one bureau doesn't have the same information as the other two. So that can happen, but in a perfect world, they're supposed to all have the same information about your credit habits, and then they each assign a score. The higher the score, the more favorable you look to somebody considering to lend you money, that you're someone that they can trust with their money to repay them. So that's basically the purpose of these credit bureaus, was to give all the financing people in the US the ability to run your credit score and be able to make a credit decision as to whether or not they're comfortable lending you money.
Thank you. So what is considered a good credit score, and what is the minimum score needed to qualify?
Well, that depends on the loan program. So that's kind of a complex question. There isn't just one score for all mortgages. Personally, I would say anything 700 and above would be considered a good credit score. I think anything over 760 and above probably would be considered an excellent credit score. It's very rare, but sometimes I get people that have an 800 or higher credit score, and that is just like very rarely seen. But they exist, scores in the 800, and that's like above and beyond excellent.
Wow.
So anything below, I would say a 700 score, you are going to start seeing your interest rates that are offered to you start to be more negatively impacted. So, if you have a score in the 600s, you're definitely going to be offered a higher interest rate than somebody with a 750 score. So it becomes a part of one of the components that lenders look at in determining what kind of an interest rate you can get or how much the interest rate is going to cost you to get it.
But they can improve it, right? And then apply.
Oh, yeah, for sure. In fact, that's one of the biggest reasons I always tell home buyers, the minute you're even curious about buying a home, you should get pre-approved with a lender because time is on our side. If someone comes to me early and I pre-approve them and I see that their score is good, but I look at their credit report and I see little things that they could improve and I can give them feedback, that can be tremendously helpful. Sometimes I can give people a few tips to just change a few of their habits or maybe pay down a credit card a little bit if they can. And it can be a tremendous improvement to their credit score so that by the time they find a house and we're actually getting them the mortgage, maybe their score now is 20 points higher or 40 points higher than when they originally came to me.
So this is the question. Are there any quick ways to improve a credit score in a short term?
Absolutely. So the easiest thing you can do is have your balances paid down under that 30% threshold. So again, any credit card you have, you want to try to not charge it past 30% of your available credit limit. If you have one that you've exceeded that, then you want to try to work on paying it down under that 30% limit. Now, something interesting, Olina, that a lot of people don't know about credit scores is each trade line reports to the bureaus randomly once every 60 days. So a lot of people will say to me, but Michelle, I pay my credit card off in full every month. Who cares if I maxed it out? I always pay it to zero. what I have to explain to people is they might report your balance to the credit bureau 2 days before you paid it to zero. So it'll show a maxed out balance, and then that credit card doesn't have to report to the credit bureaus again for 60 days. So for 60 days, it'll look like you have a maxed out credit card in the eyes of the credit bureaus that are scoring you. So that's a really important thing to know is the credit cards don't report to the bureaus like on the 5th of every month or on the 10th of it's random.
Yeah. So the first one, they should minimize to 30%. What else?
So that is the quickest thing you can do to have an immediate boost to your credit score. And one of the things I do, Olena, with the clients is I have the ability to actually run something called a what if simulator through the company that runs our credit reports. And so they will actually tell me exactly what the recommendation is for the client to do regarding a pay down in order to have the maximum boost to their credit score. So if that is one of the things I'm recommending to a client, I would run the what if simulator. I would show them the options, and then the client can decide if they have the funds available. The other thing that I've seen boost credit scores quickly as well is if somebody lacks credit history. So they just have somebody that has always paid with cash and just doesn't, maybe has one credit card but never uses it or something like that. There's a way that you can add your utility history of your utility payments, like gas, electrical, stuff like that, to your credit reporting. You can tell the utility and the credit bureaus that you want your history, your payment history with your utility companies included in your credit reporting. So that is another quick thing that I have seen have a pretty immediate positive boost to somebody's credit.
Okay, interesting. And it's good that we can do it. But what common mistakes do people make that hurt their credit scores?
The worst thing that people can do that can literally devastate their credit score, like drop it 80 points, 60 points, 100 points, like that, is make a late payment. And the story I hear, I'll tell you the two most common stories I hear from people that have perfect credit usually, but they had one dumb late payment that devastated their score. These are the two most common things I hear all the time is they'll say, oh my gosh, Michelle, I opened up that credit card because they offered me 10% off my purchase. And then I forgot about it. I forgot that I opened up a Kohl's charge card or a Macy's charge card, and it was e-statements and I didn't get it in the mail. I didn't know. I forgot about it. That I have literally seen some of my clients who had perfect credit otherwise drop their score 100 points because they opened up a Kohl's charge card to get 10% off their purchase, or a Macy's, like whatever store, jewelry store, any store, and they forgot about it. The second biggest mistake I see people make is they will not pay, and it's usually a cell phone or a cable bill of a house they moved out of, or a cell phone that they turned in and went to a new provider. They will get that final bill and they won't say, I turned the equipment in, and there's a charge there saying that they didn't turn the equipment in, or something like that. And so they'll call, they'll say, I turned that in. And the person will say, well, no, you have to pay it. We don't have it. And so they'll say, forget it. I'm not paying you. You're wrong. And so out of being correct, they don't pay like a $50 cable bill. And then what happens is after several months, that company will send you to collection for it. So the minute you have a collection on your credit, that can also drop your score 100 points.
Wow.
So that is the second most common mistake I see people make. So I tell clients all the time, and it could be a medical collection too, a medical bill, cable, cell phone, Those are the most common. But I'll tell people, if you get a bill, of course, try to fix it. If it's wrong, do everything you can. Of
Call
course,
them?
you don't. Yeah, call them.
Okay.
Do whatever you need to do. Of course, nobody wants to pay money
Yes.
they don't owe. But if you've tried all that and the company still insists that you owe them, do not allow it to go to collection. You've got to negotiate something with that creditor before they send you to a collection agency, because the way it will hurt you in your credit card interest rates, car loan interest rates, mortgage interest rates, to have your score drop 50 to 100 points will be the biggest mistake of your life. That will cost you thousands of dollars versus just paying maybe that one bill that needed to be paid.
And for how long do they stay on the report?
The collections stay on until they're resolved. And so what happens is, if you go to apply for a home loan and you have a collection, the underwriter oftentimes will say, we cannot close escrow unless they pay off that collection. So you'll end up being forced to pay it anyways. The only collections that the underwriters will not usually require to be paid for closing is medical bills, because a lot of times they know that sometimes the insurance is taking a long time. So sometimes medical collections will not have to be paid. But if it's anything other than that, it'll have to be paid. And there are even banks, mortgage banks, that if you have too many collections in the last year, if they see that you had 2 or 3 collections in the last most recent 12 months, they won't even do the loan. They'll just say, we don't approve your loan because you have too much negative credit history recently.
Even if you solve this problem, right?
Even when you solve it, they will see that it was there. But I will tell you something. That's another reason why getting pre-approved early is so important. Like, I recently had somebody who came to get pre-approved with me. They did not know that they had a collection for an old cable TV system on a second home they owned that they sold like 2 years ago. They sold the property. So they didn't even know that the cable TV people had filed a collection against their credit until they applied for a mortgage with me. So what they were able to do, I said, call the collection agency. You can negotiate. Sometimes you can negotiate to pay them less than what they're saying you owe them. So I said, try to negotiate, and then also ask them, if I pay you off right now, will you delete this from my credit? And for that particular client, they deleted it.
Wow.
They did. I don't say they always do, but you have to ask. And if you ask, if you don't ask, they won't. But if you ask, a lot of times they will. So we were able to get it completely off of her credit report, and her score literally jumped up like 60 points. And it made a big difference on her mortgage.
Yeah, good. They're lucky. What happens if someone closes an old credit account or opens a new one before applying for a loan?
Yes, that can be a problem a little bit. Whenever there is new activity, an activity can be a new card opening, a card closing. Whenever there's activity, that can trigger a temporary slight drop in your credit score. It doesn't last very long. Usually it levels off again in about 2 months, but I don't really know why, but for whatever reason, if you open or close an account, it can just kind of lower your score a little bit for a couple of months. So if you're shopping for a house, like we're pre-approved, we're shopping for a house, or you get into escrow, that is not the time to be opening a new account or closing an old account. And what I tell people all the time is credit history is very positive for your score, having a lot of history. So even if you're like, I want to pay this card off and I don't want to use it anymore, people's first instinct is to pay it off and close it. What I tell my clients to do is pay it to 0 and then cut up the card so you don't use it, or put the card in a safe so you don't have it.
Oh, okay.
But you don't need to close the account. That way you still have that nice long history of good on-time payments with that trade line.
Okay, but I have heard that some banks can close the credit card if you don't use it. Is it right?
I mean, that's possible, I guess. I mean, I'm just saying, like, you can try that instead of closing it right away.
Okay, and we were talking about credit cards from the different stores. Do you recommend getting them or?
I personally do not recommend getting them because my experience with them personally and for my clients has been that the more cards you have, the more opportunity there is to forget to pay one of them on time. So for me personally, I try to keep 3 cards that I use, one for business, one for personal, one as a backup in case one gets declined or something. But I try to keep it very simple so that I don't forget a card that, oh my gosh, I went into that store. I haven't used my Bloomingdale's card in 3 years, and then I use it and then I forget that I need to pay it, you know? That's what I do, but I try to do things to outsmart myself from making a late payment, you know?
Yeah, I mean, I have a lot, but I use only 3 as well. I've heard that it's the best way to have a good credit score.
Yes. And by the way, I'm glad you just said that, Olena, because it is really good to have 3 to 5 trade lines. That's kind of the sweet spot, and to use them. So I tell my clients all the time, like sometimes I'll have clients that they just have one card that they use for everything. So and they'll have another card, but they never use it. So I'll tell my client, hey, why don't you start using this other card you have? Like, just make it a rule. Like, whenever you go get gas, use that a different card. So it gives you more of that. It allows the credit bureaus to kind of see those good patterns on more than one card.
Yeah.
Or I'll tell them, use that card when you go to the grocery store. Like, you know what I mean? Just so you use a little bit more than just one card. The other thing that helps give you a good score is having what they call one installment loan. So that would be a loan that's like a car loan or a boat loan. It's a little different than a credit card. It's like one amount, it's fixed, and you pay it off over time, kind of like a mortgage. So those are good loans that can show good patterns also. But again, I'm not promoting people go get into debt to have a better score. Like, you do not have to have debt to have a good score. You can use your cards, pay them off in full every month, and have an excellent credit score.
So what is the best way to monitor your credit?
So there's so many, I don't really want to push like one thing over another because there's so many credit monitoring programs. I personally think that it's always better to go direct to the bureaus. So like Experian, Equifax, and TransUnion, they all have their own credit monitoring. You can log into their direct websites, not some third-party website, but Experian.com, TransUnion.com, Equifax.com. You can log in directly to those trade lines and you can do your self-monitoring of your score. You can lock your credit. So, if you don't want people running your score without your permission, you can put a freeze with your bureaus. You can also pay. They all offer different things. You can pay for them to alert you if somebody has run your credit. A lot of people aren't aware, but when you have credit cards, periodically those people will run your credit just to see like what your score is lately. So a lot of people will be like, oh, this person ran my credit. I didn't know they were going to run my credit. Well, that's something that you maybe agreed to in the fine print when you got that credit card, that it was okay for them to check your credit once in a while. Most of us don't read, all the terms and conditions and fine print when we get credit cards. But yeah, so I would say the best way is to deal directly with the credit bureaus. I know there's a lot of third-party companies that exist. I use
Credit Karma. Is it okay?
Yeah, I've heard a lot about Credit Karma. Yeah. That's a great one. So I would say to people, research online, ask a friend. We've thrown out a few options right now. And I think you kind of can't go wrong, with one of those reputable companies.
Yeah. So can working with a credit repair service help, or is better to handle it yourself?
So yes and no. If your credit just needs a little boost, like paying down balances, little things like that, those credit companies, you don't really need to involve them. That's something that I can help a client with, or they can just do on their own, paying down their debt. I think those credit repair companies can be very helpful when you have a lot of really serious derogatory credit, like a lot of collections, late payments that you believe are wrong, charge-offs, like, just things where you're like, that's not true. I never did that. That's from 3 years ago. I can't even reach anybody on the phone anymore. Like stuff like that gets a little bit harder for somebody to do by themselves. I have had credit repair companies help some of my clients that have a lot of stuff that needs repair, but they're not cheap. So, I've seen clients spend $1,000-$2,000 working with these companies if they have a lot of stuff that has to be repaired. So that's why I tell people, if it's simple stuff like paying down balances or calling about a collection, I feel like those things, if you just have a little bit of stuff, you should try to do yourself. Because it's not going to be inexpensive to engage a professional repair company.
Okay. And the last question. What advice would you give to first-time homebuyers about managing their credit responsibly?
The best advice I give to all my homebuyers, especially first-time homebuyers, is set up auto pay for everything. Either do it through your own banking services. If your online banking offers bill pay, you can set it up there. If not, you can literally call your utility companies, your credit card companies, your mortgage provider, and you can actually authorize them to do a monthly withdrawal out of the account of your choice so that your payments are never late. That is the best advice I can give anybody.
You mean the minimum payment, right?
Whatever they want.
Whatever. Okay.
They could set it up for the minimum payment. You can set it up for payment in full. It's your choice. So you can set it up however you want. But I tell people to do that because it just takes that one time that you were like on vacation and you forgot, or the mail didn't get to you, or someone stole the mail out of your mailbox, or you were sick. There's just so many times that something can happen that makes you have a late payment, even though you don't normally do that. But if you have everything on auto pay, like that can just never happen to you. You're always covered.
Okay. Wonderful. Thank you so much for taking the time to be with us today. I really appreciate it.
My pleasure.
I am looking forward to create more videos with you.
Likewise. Thank you. Thank you for inviting me, Alina. I really
Thank you,
enjoyed it.
Michelle.
You. Okay. Talk
Bye-bye.
soon.